Okay, so without wasting our time, the first question we looked at, it was the associate that sold to the parent. So in this, okay, let's do it this way. Let's see if we can do 2, 3 for this night and we'll just call it a day. Will someone take us through the journey of two ASAP?
Question 2. The statement of profit the statement of financial position of JCO and its investees company P Co and S Co at 31st December 2025 are shown below. All field has need to be correct. Status quo. Additional information. JCO acquired 600,000 ordinary shares in PICO on 1st January 20x0 for $1 million when the retained earnings of PICO were $200,000. At the date of acquisition, at the date of acquisition of PICO, the fair value of its freehold property was considered to be $400,000, greater than its carrying value in PICO's statement of financial position. PICO had acquired the property in January 20x0, and the building elements, comprising 50% of the total value, is depreciated on cost over 40 years. JCO acquired 225,000 ordinary shares in ESCO on 1st January 20x4 for $500,000 when the retained earning of ESCO were $150,000. PICO manufactures the components used by both JCO and ESCO. Transfers are made by PICO at cost plus 25%. JCO held $100,000 inventory of these components at 31st December 20x5. In the same period, JCO sold goods to ESCO, of which ESCO had $80,000 in inventory at 31st December 20x5. JCO had marked this good up by 25%. The goodwill in PICO is impaired and should be fully written off. An impairment loss of $92,000 is to be recognized on the investment in ESCO. So please scroll up. Okay, NCI is valued at full fair value. Pico shares were trading at $1.6 prior to the acquisition of by JCO. Required prepare in a format suitable for inclusion in the annual report of the JCO Group, the consolidated statement of financial position at 31st December 20x5.
Okay, thank you. So we have Eco, JCO, and ESCO. So what do we have there? In this arrangement, JCO is the parent, Abi. Eco and ESCO will be associate and subsidiary. So the first thing we have to do is to draw the group structure, right? The first thing is to draw the group structure. So we'll have question 2. We have JCO acquiring PICO. What percentage? They said they acquired 600,000 and they also acquired ESCO. So percentage of holding in PICO will be what? They said they acquired 600,000 shares. And how many shares do we have in Pico? We have what? We have 1 million. We have 1 million naira of $1 per share. So that will be 1 million divided by $1 per share multiplied by 100. And that will give us how much? 60%, right? So that means the percentage of holding 60% and NCI will be 40%. In ESCO, they acquired what? 2 to 5,000 shares. But the share capital of ESCO is what? Is 750 at $1 per share. So that will give us what rate?
30%.
30%. So that means ESCO is an associate. Date of acquisition for P, date of acquisition for S, then date of consolidation. Consolidation will be 31 December 20x5. Acquisition for P will be 1 January 20x0, while acquisition for S is 1 January 20x4. So that means they were all fully acquisition. So going to note 3, we'll have what? Okay, they've given us the purchase consideration and the retained earnings, the fair value. We were told that the fair value of their freehold property was considered to be 400,000 greater than its current amount. So we'll have fair value adjustment surplus in the books of who? Pico. How much? 400,000. Then what? They said they had acquired the property in 1st January 20x0 and the building elements comprising 50% of the total value is depreciated on cost over 40 years. That means the additional depreciation this one will result into will be 50% of the surplus, because only 50% of the value represents building. So 50% of the surplus will also be for the building, divided by the 40 years, multiplied by, if it was acquired January 20x0 and we are consolidating as at December 20x5, that's how many years? That's 6 years. And that will give us how much?
30.
That will give us 30,000. So we can just use 30. And just use 30 so that our figure will be uniform. The next one is what? Information about the acquisition of this associate, no problem. It said Pico manufactures a component used by both JCO and ESCO. Transfers are made at cost plus 25%. JCO held 100% of this. You know, Pico to JCO, what relationship exists between them, parent and subsidiary? Where Pico is subsidiary, JCO is parent. So we'll have unrealized profits for that. Unrealized profits on inventory, which is what? Pico selling to JCO. And now we what? They said they are selling at 25% markup, so that will be 25 over 125. And JCO still had 100,000 of the goods left in their inventory. What will that give us?
20 $20.
Okay. 20. Don't worry. So the next one, they said in the same period, JCO sold goods to ESCO, of which ESCO had 80,000. So JCO, which is the parent now, is selling to the associate. JCO selling to ESCO, parent selling to associates. We have what? We have, and they said JCO marked this goods up by 25% also. So that's 25 over 125 multiplied by 80,000. But you know, if their PICO are sold to ESCO, that one we cannot take it as unrealized profit because they are not in the same group. Because they are not in a group. So what do we have? What do we have? 16,000.
4.8. 4.8.
4.8K. But we will now
4.8
multiply this by the percentage of holding, which is 30%. And that will give us how much? 4.8. So she has already multiplied by the percentage of holding for the parent. So that's that. So they told us the goodwill has been fully written off in PICO, while that of S has an impairment loss of 92,000. NCI is at fair value. So NCI fair value, they did not give us. But they told us the share price on that day is 1.60 naira. And since JCO already acquired 600,000 shares of their 1 million shares, they will what? They will only hold 4,000 shares, 400,000 shares. That should be $1.60 times 40% of 1 million over $1. That will give us how much?
640,000.
640,000. So having done all of this, we can now go ahead to do the net asset summary. So we have DOA, DOC, PAE. Then we can also have DOA reporting it and PAE. Abi? So for the DOA, DOC, for the subsidiary, we have it to be what? Share capital 1,000, 1,000. Then this 750, 750. Retained earnings on the date of consolidation here was 885. Here was 390. Then at the date of acquisition, this one was 400. So post acquisition will be 685. Hello, Toyosi, can you mute your mic, please? 150. So this will give us what? 1 4. Hey, Toyosi. $240.
Out of fair value adjustments.
We are still coming now. We are not done yet.
Oh, sorry.
Since you guys fail to give me figure now. So the next one is what? Fair value adjustment. For PICO, they have a surplus. Abi? Surplus of how much? 400. 400 million. These ones don't have anything. Then there's an additional depreciation of how much? We calculated it to be 30. This doesn't have any. Then what else do we have? We have then we have what? We have unrealized profits. Pico was the one selling. They sold goods of the unrealized profit is 20. While here, Jaco was the one selling, so the unrealized profit cannot come here. So what do we have as summation?
So for the DOA, we have 1,600,000.
I'm coming on.
Okay.
We have what? 1,600, Abby?
Yes.
Yeah.
For the DOC, we have
That,
2,035.
yeah, good. So we can go ahead to goodwill now, Abby. Purchase consideration is how much?
Sorry, Mr. Good. Why do you debit the unrealized profits 20? I thought it's um J
Is what?
the thing that you're selling. The unrealized profits,
No.
that 20.
Subsidiary sold to parents now.
The
Have you
20.
forgotten? Yes, now. Pico sold to Jaco. Read the statement again. So what's the purchase consideration? They bought it for 1 million. Then NCI at fair value. How much? We calculated that to be 640. Then we less fair value of net assets. 1,600. So goodwill at acquisition is 40. Abi? So we less impairment. And the impairment is how much? They told us it has been fully written off. So that means impairment is also 40. Then it is what? It is nil. Then we can now go ahead to do what? And now go ahead to calculate investment in associates. But let's calculate the NCI first. NCI will be value at acquisition. Value at acquisition is how much? 640. Then share of post-acquisition earnings. That will be what? 40% of 40% of what? 40% of 635. And that will give us how much?
254.
254. So for the share of impairment, their share of the impairment will be 40% of 40, and that will make it what? So what do we have as the NCI value?
878.
878. So the next thing should be group retained earnings. Group retained earnings will be JCO's retained earnings, which is how much? 885. No, 1460. Share of post-acquisition earnings. Subsidiary loan. Sorry. Share of profits from PICO. That should be 60% of 635. Then from ESCO, that should be what percentage?
30%.
30% of how much? Of 240.
240.
So that will give us how much?
PICO is 381.
381,
72.
72. So share of impairment will also be 60% of 40, which is how much? 24. Then unrealized profits on inventory, because they were the one that told Mr. George to come. So we need to hand him. So unrealized profits will be what? Unrealized profit will be the one they sold, the inventory they sold to the associates, 4,800, 4.8. So what else do we have? I don't think we have anything else. What do we have as the total?
$1,884.2.
1,000.
884.2.
So what do we have in investments in associates? We have costs. What's the cost? They told us they bought the 225 for how much? For 500,000. Then share of post-acquisition earnings. That will be 30% of 240. And that is 72. Okay, what else do we have? Impairments. Impairment is how much? 92,000. But as for the
Sorry, Mr. Goodwin. That impairment, are we not going to add it to the retained earnings? The impairment in
impairment, no, you can't put it in earnings. What we now is unrealized profit on inventory, because the inventory is with the associate.
okay.
That will be what? That will be 4,800, 4.8. What do we have? Figure
475. Is that 4.8, Abby?
yes, 4.8.
So 475.2.
Let's try and consolidate and see if we are right. Consolidated as at March 31 December 20x5. What do we have? Non-current assets, PPE, which is how much? 1950 plus 1250, but we are not consolidating associates. But the fair value adjustment plus 400 minus what? Minus 30. What do we have in total? Plant and machinery. $795 plus $375. Sorry, it should be 375. Do I have people on this call?
Yeah, PPE, sir. 3,570. 570.
3,570. Plant and machinery.
1,170.
I told you for investment. When they give you like this, just take out the ones of the subsidiary and associate they bought. It is zero. But in some cases, it may not be zero. So that's why you should always do this. Is it clear?
Yes, sir.
Investment in associates 475.2. Abi, what is the name of our total assets? Sorry, that's non-current assets only. We have current assets. Inventories, how much? 575 plus 300 plus what's the inventory balance? Inventory that we decide this thing. Unrealized profit on inventory, how much? 20. And that will give us what?
855.
So to receivables, we have what? 330 plus 290. Then cash, we have what? 50 plus 120. And that will give us what? 170. This will give us what? 620. The first
Then
one will give us
855.
8,895.
55.
895. So what's the summation of everything?
So the NCA, non-current assets, the total sum is 5,205.2.
Just add this new one to it. Do you get me?
Okay, sir.
Add the current asset to it.
$6,900.2.
Share capital 2,000. Group retained earnings 1884.2. So what will this give us? 3884.2 NCI. 878.
Sorry, Mr. Goodwin.
Mhm.
Inventory, the unrealized profit, you're going to less it now. You added plus 20.
Sorry, it should be minus. Maybe no, it should be
So that's
minus.
supposed to be 5. Yes.
Eight what?
855.
855. So please calculate the total.
6,860.2.
6
860.2. 6860. Yes. Point 2.
So non-current liability, what do we have? 12% loan stock. 500 plus 100. That should be 600. Trade payables. 680 plus 350. Bank overdraft. Bank overdraft 560. This one is what? 1030. Summation of everything is how much?
6
Yeah,
9 5 2.2.
69.
5 2.2.
Are you sure something is wrong somewhere? What could be wrong?
So I was saying that in that CRE, you did not add share of impairment from the associates.
CRE, which CRE?
Group retained earnings. Like in the share of
Oh,
impairment, you
yeah,
did not add the
yeah,
associates.
there's impairment on the associate. Oh.
Yes.
So what do we have as the total for this? Okay, what do we now have?
1,817, sir.
1817. Abi,
Yes, sir.
it should have a point. It doesn't have any point.
Doesn't have any
How
point,
come-
sir.
Where did you now get the point two we were using before?
You add 4.8. The 4.8 here, URP on investment.
Yeah, sorry. So instead of 20, it should be the 4.8. You know, the 20 is the associate that is the subsidiary that is selling to the parent. But if subsidiary is selling to parent, that means the unrealized profit should be adjusted in the books of the subsidiary, not in the books of the parent. So what do we have in total?
1,801.5. No, sorry, point 8. 1,801.8.
Something is still wrong. The unrealized
No,
profit is
no.
supposed to be
Oh, I like
adjusted.
profit in a hair. 1792.2.
What do we have in total? Oh, yeah.
We have 6,860.2.
So that is that. Is it clear?
Yes, sir.
Do we still need to do
Sir,
another
mini
question?
question.
Go on with your question.
Yes, so I wanted to ask, while solving for consolidated statement of profit or loss, statement of
Yes.
financial position, are we supposed to like deduct the impairment loss while calculating goodwill, or we don't need to do that?
We are calculating SOPL, or what do you say? Can you take your question
Yes, if we
again?
are calculating SOFP and they gave us impairment loss, are we supposed to deduct it from goodwill or just the SOPL?
You deduct it from goodwill now. You will have to deduct it from goodwill.
Because I saw one question in the answer, they not deduct the payment from the goodwill.
Depends. So in the SOPL, the impairment you will deduct is the impairment in the current year. But if the impairment was in the previous years, you cannot deduct it because SOPL only reports what transpired in the current year. Is it clear? But in the SOFP, regardless of the year, you will deduct it. Do you understand?
Thank you.
Do you understand? Wow. Okay. Should we call it a time or we should look at the next question? Oh yeah, I think you should go try the remaining two on your own. And if you have any issues balancing it, let me know so that we can do a class or we can look at